At its core, trading is actually really simple. A lot of people think it's super complicated and you need a ton of indicators or you need some secret strategy, but when you break it down, it's really not that difficult. You're either buying or you're selling based on where you think price is going to go. That could be for Forex, which are foreign exchange currencies, or it could be for futures, which are contracts based on price, or other markets like indices or even crypto. But no matter the market that you're in, the idea stays the same. If you buy and price goes up, you make money. If you sell and price goes down, you make money. That's it. That's the foundation of trading. But this is where most beginners go wrong. They understand the surface level, but they don't understand why price is actually moving the way that it does. So they start thinking, price is random, it's unpredictable, or it's just luck. But it's not. Price doesn't move randomly. There's always a reason as to why it moves the way that it does. And once you understand that reason, trading becomes a lot less confusing. The market moves to fill orders, and that might sound simple, but this is actually where most traders get it wrong. Every time price moves, it's because buyers and sellers are interacting within the market. But the key part is, not all participants in the market are the same. There are big players in these markets, institutions that have a lot more money than retail traders. And because they have that much money, they can't just enter and exit positions instantly like retail traders do. They need liquidity, which basically means they need enough orders on the other side of the market to fill their positions. So what happens is price moves to those areas where liquidity exists. And where are those areas that liquidity is sitting? They are above highs, below lows, and around obvious levels that people are watching, because that's where most people have their stop losses. So what you'll often see is price breaks a level, takes out those stops, and reverses in the other direction, because those stops are liquidity. So instead of thinking, price broke this level, let me enter, you need to start thinking, why did price break this level? Most of the time, it's not to continue immediately. It's to collect liquidity first. And once you understand that, you stop getting caught on the wrong side of these moves. Now here's where most people go wrong. They focus on entries. They try to find the perfect entry, the exact top or the exact bottom, but the problem is they don't actually understand what the market is doing and why it's doing it. So what ends up happening is they enter right where liquidity is being taken. They end up entering right where price is designed to move against them. And then they get stopped out. And after that, they think their idea was wrong or they need a better strategy. But in reality, it's about their timing and their understanding. Another big mistake that beginner traders make is overtrading. Taking too many trades or forcing setups that aren't really there, or trading just because you're bored and you feel like you need to be in the market. And this usually comes from impatience. You're on the chart, you don't see anything clean, but instead of waiting, you try to create something that isn't really there. Don't do that. Don't look for something that isn't there. Trade what the market gives you. And then in my opinion, the biggest issue of all is risk management. This is the part that most people ignore, but it's the part that matters the most. Because at the end of the day, you're not going to win every trade. But what matters is how much you lose when you're wrong. If one trade can hurt your account, or if one trade puts you in a bad position, you're risking too much. It doesn't matter how good your strategy is, you won't be consistent. So what should you focus on instead? If you take anything from this video, it should be these three things. First, structure. You need to understand what the market is actually doing. Is it moving up, making higher highs and higher lows, or is it moving down, making lower highs and lower lows? Because if you don't understand that, you're basically trading without direction. And if you trade without direction, everything feels random. But structure gives context. Second, patience. This is where most people struggle. Instead of waiting for confirmation, they try to guess where the market's going to go. They enter early, before the move is actually confirmed, and that's why they get caught on the wrong side. You don't need to catch the exact top or bottom. You need to wait for the market to show you its hand. Patience is what keeps you out of bad trades. Third, risk management. This is the most important one, because even if you're right about direction and your timing is perfect, if your risk isn't controlled, none of that will matter. You need to focus on how much you can lose, not chase how much you can make. Because losses are part of the game, but what separates consistent traders is how they manage those losses. Trading isn't about being right all the time. It's about being consistent over time. And consistency comes from structure, patience, and risk management. This isn't something that you master overnight. A lot of people get into trading expecting fast results. They think they're going to make money in a couple weeks or even right away, but that's not how it works. I didn't get my first payout until 7 months after I started trading. And during that time, I was making mistakes, figuring things out, and learning things the hard way. And the reason I say that is because I didn't have something like this when I first started. So if you're watching this and you're actually taking time to understand the basics of trading, then you're already ahead of where most people are. But at the same time, this isn't a way to get rich quick. It takes time, discipline, and repetition. You have to see things play out, you have to make mistakes, and you have to learn from them. That's how you improve. And once you understand the foundation, and once things start to click, everything starts to make a lot more sense. And trading becomes a lot less confusing and a lot more structured. In the next video, I'm going to explain market structure in a simple way so you actually understand what you're looking at when you open a chart and you're not just guessing anymore. This is the free course, so I'm going to be building everything step by step, and if you follow along properly, everything will start to connect. If you want to go deeper and see exactly how I apply all of these concepts, I break everything down step by step in my Discord. That's where I go more into detail and show you real examples and help you actually put this into practice. The link is in the description.